of the session, and that's Jerry Sneed, Senior Private Wealth Advisor at Procyon. Jerry, thanks so much for joining the show.
Yeah, thank you, Caroline. How are you?
I'm good. Jerry, did I get that name right, your company name right, Procyon?
You did. Yeah, Procyon. Good job.
Procyon. Okay, great. Just wanted to make sure here. So it's a Wednesday that feels like it should be at least Friday right now, a shortened week, but it's turned out to feel like a pretty long week right now. More weakness, erasing early gains that we had seen earlier this week. I just want to get your sense of the overall weakness that we're seeing today and your view on the current market.
I just think it started with obviously Nvidia news last night with the write-off, the charge-off of $5.5 billion, and then Powell didn't help us much, just being on saying sentiment was just so negative, and sticking to his dual mandate. So it's pretty nasty. But the VIX is hanging in there at 33. We're nowhere near the high of 50. So I think it's one of those days we have to just kind of grit your teeth and wait for it to be over.
We'll get to the VIX in just a second, but I do want to ask you about those comments from Fed Chair Powell. Did we learn anything? Because I don't think it should be a huge surprise that tariffs can create difficulty for the economic outlook, right?
Yeah, I think he plays the game pretty well. He kind of, is dovish when he needs to be, and then he has these kind of random talks where he's, in my view, a little bit hawkish. So I don't think he said anything we didn't know. I just think he was kind of reminding investors of what we kind of already knew. And in a day where the market was already under pressure, it just kind of extrapolates it down a little further.
Okay. Meanwhile, you talked about the VIX at 33, so nowhere near the highs, but still pretty elevated. So what does a VIX at 33 imply to you?
I don't think it implies much. I think it, being above 50 for a few days was kind of the, capitulation. And so I think just we have to get to that level again before you see significant buyers. I just think with everybody redoing their estimates for year end or even 12 months out, I just think you're not going to have anybody that's going to step in and buy here probably until we get closer to 5,000 in the S&P. I do think that 5,000 is probably the new floor given Trump, kind of capitulated. So I think, previously people were worried about 4,500 or 4,800. I do think 5,000 is probably the new floor there.
Okay, I was taking a look at the notes, and you liken the market to a coiled spring. So basically it has a lot of potential, I'm assuming, to make a strong move in one direction. I'm assuming that direction would be higher based on the coiled spring reference. Sounds like could see some more downside ahead of that if you have your eyes on 5,000. But what is it that the market needs to see in order to release, if you will?
Yeah, psychologically, people say if you're bearish, you sound smarter. So allow me to sound like an idiot for a few minutes here. I just look at the capitulation from Trump, what he's doing with trade, how he's kind of negotiating different things for each country. I think is a net positive over the long term. Like I tee it up as a coiled spring because you just don't know when it's going to release, and you don't know what factors are going to kind of come into play that allow it to release. The positive I see here in the market for companies is it wasn't too long ago where if you were a company and you reported earnings and you didn't mention AI in your earnings report, your stock was down 10 to 20%. Right. Now, with the market kind of suppressed and you're kind of waiting and seeing, and obviously you're trying to navigate the tariff policy, you have plenty of time to go ahead and implement an AI strategy that should be able to compound you to the upside once we kind of get past this uncertainty in geopolitics. And so I think any good CEO, any good management team are running two playbooks, and they're implementing AI, which is a real secular trend, which should be able to save them money and let them compound growth to the upside once we get out of here. So kind of see that coiled spring, building, and just depends on how much does it build and when does it release.
All right. So I know you have some specific stock picks that you could get to, but before we get to those actual names, I'm curious if you think that what the Trump administration is doing in terms of tariffs is overall a net positive. That's assuming what? That these tariffs stick at current levels, that these negotiations happen and the tariffs are off the table? That's what is your kind of base case there in terms of thinking that this is an overall positive thing?
Yeah, I think you get to a lower net tariff, and then you have complete, no tariff for certain countries. And then I think you can even get net positives. I actually think there'll be quite a few deals for people buying our treasuries. I know that's important to the administration. So I think you're going to see a variety of deals. I think it's going to be country by country. And so anything's better than we kind of had before with the deficit. So I look at it as as a long-term net positive. It just depends on how long does it take to get there, and it could take us all summer. And meanwhile, sentiment has gotten crushed. So it's kind of like, does he take lesser deals just to keep sentiment up and kind of support the market, or does he really, lay into these countries and this takes all summer and we're kind of just sitting here with the S&P down until then?
Okay. All right. In terms of some of the names you like, Nvidia is actually your largest position, which might hurt on a day like today with Nvidia shares down about 10%, now down 25% year to date. Do you take advantage of the dip and add to your positions? Or now, based on those charge-offs, do you start to rethink that largest position?
Yeah, I think the restrictions are more geopolitical shot across the bow kind of a story. So I'm not overly nervous about the restrictions and the charge off. It is interesting to me if there's so much demand for the Nvidia chips, why they couldn't just resell those somewhere else. And I assume it has to do with just the type of chips they're set up as. So I'm not overly nervous there. I still think the market underappreciates how much software comes into play with Nvidia and just how dominant they are in the space. So I'm not a buyer. I haven't been a buyer, through the sell-off of the name, but I hold steady there. I kind of look in this kind of environment, if you're allowing companies and management teams to kind of build their AI strategy and you have a long-term belief in that, you can kind of go simple and, look at the insurance companies if you'd like, companies that can cut cost or, do underwriting with artificial intelligence. Or you can kind of pivot and look at, cybersecurity, for example, which is, AI in itself, or you can look at the marketing, from a marketing perspective and look at some of the payments companies. So I think you can play it, based on your risk tolerance.
Sure. Okay. So let's break down let's start with the AI and software plays. You say you like Amazon, Microsoft, and Meta, and good news, you can get them on sale right now because the Mag 7 seeing a lot of selling pressure. Even Meta, which was once, obviously one of the best performers of the Mag 7, is down now about 15% year to date. So adding to those positions, and nothing fundamentally changes your bullishness on the Mag 7 based on what we've seen so far in 2025.
Nothing fundamentally changes my view on Amazon, Microsoft, or Meta. I think they're all playing for the AI agent, Meta specifically. So I happen to like them. I think they're a good global play just based on their traction, in India, for example. So I think I like them. They've used AI for a long time in their marketing. So I think that's a real positive. I really like Microsoft just because they've been the adult in the room and they've been super measured on their spending and their strategic relationships. So I think that's an easy one to buy under this pressure. And then Amazon, you kind of got a mix of everything. They do have some headwinds with their, what stuff they source out of China. So there's a little bit more of an issue there, but they've been doing a lot of stuff with the titanium chips. They're fully focused on artificial intelligence and what it means for the business over the next 5 years. And so if you're looking for places to kind of hunker down, I think these are solid plays.
Okay. Speaking of Amazon obviously could have some economic impact if this economy does end up going into a recession. And I see that in the payment space, you like Shopify. I'm curious about how any potential recession could impact your call on Shopify as well.
Yeah, I'm cautious on the payment space because of, potential of a recession or a global recession or that friction. I don't think that's not my base case. I do think we're going to come out the other side of this. I just think it'll be a little bit more measured when it comes to, legging into the payments companies. But Shopify, if you're going to play the AI of, kind of following you around, knowing what you like, putting stuff in front of you that you could possibly buy, I think Shopify is a good play. But I put a lot of trust in the CEO, right? So like the founder and then the CEO. So I trust them to navigate the tariffs. I trust them to navigate the AI spend. So in times like this, the only thing you can really do is trust that you're giving your money to the executives and they're going to do the right thing for you.
Okay. And you did mention cybersecurity as well. I see your picks there are CrowdStrike, which is actually still positive year to date, holding in there pretty well, up about 10% year to date, and Palo Alto, which is down about 7% year to date. Tell us why you like those names in cybersecurity.
Just the total addressable market for cyber is massive, and it's only getting bigger. So I don't think you can go wrong with either one. I've been a longtime fan of CrowdStrike. I like the way they kind of approach the market. They have less of a sales force than Palo Alto, which they've been ramping up. So I think that's a positive for them. So I don't think you can go wrong in anywhere in the payment space. Clearly, Google liked it with their recent acquisition. So I like both names. I think it's just it's an overall market play on cyber.
All right. We appreciate your picks and your thoughts. Thanks so much, Jerry Sneed,
Absolutely,
Senior
John.
Private Wealth
Thank you.
Advisor at Procyon.